Every trader dreams of entering trades at the perfect moment, right after a clean breakout, during the safest pullback, and in full alignment with market momentum. But most traders rush in too early, chasing moves instead of letting them develop. In this tutorial, you'll learn a two-indicator strategy that helps you identify high-probability pullback entries, combining the EMA Pullback indicator with the MACD4C momentum filter. The goal? To help you trade with structure, confirm direction, and manage risk like a professional. Let's go step by step.
Step 1. Setting up the EMA and Pullback indicator. We'll begin by laying the foundation of this strategy with the EMA and Pullback indicator, a powerful tool designed to highlight breakout and retest structures across all markets. This indicator visually marks when price pulls back into the moving average zone after a strong move, signaling potential continuation points where trend traders look for high probability entries. Example setup. For this tutorial, we'll use gold, XAU/USD, on the 1-hour time frame, but this setup works just as effectively on Forex, crypto, stocks, or indices, whether you trade on 1-minute or 4-hour charts. Adding the indicator. Open your TradingView chart. Click on the Indicators tab at the top. In the search bar, type EMA and Pullback. Select the version created by the listed author. Once added, you'll notice a colored EMA ribbon appear across your chart, visually representing dynamic support and resistance zones. This ribbon also automatically highlights pullback signals after strong price movements, helping you spot when the market might resume its trend following a brief correction. Adjusting the settings. Let's fine-tune the indicator for cleaner and more accurate signals. Click the settings icon next to the indicator's name. Under the Inputs tab, enable First Pullback Only. This removes repetitive alerts and focuses on the first, most reliable retracement after a trend begins. Change first length, 20 to 45. Change second length, 9 to 14. These adjustments make the EMA smoother and more selective, filtering out market noise while capturing only high-quality retracement setups. Click OK to apply your settings. Understanding the logic. Here's how the EMA and Pullback system functions conceptually. The EMA ribbon acts as a dynamic structure zone, showing the balance between short-term and medium-term market direction. When price breaks above the ribbon and then pulls back into it, we prepare for buy opportunities. When price breaks below the ribbon and then pulls back up into it, we prepare for sell opportunities. However, we don't take trades based on this signal alone. To avoid false entries and confirm the strength of the move, we'll introduce a momentum filter, the MACD4C indicator, in the next step. Step 2. Adding the MACD4C indicator. Now that we've set up the EMA and Pullback indicator, it's time to add the MACD4C, our momentum confirmation tool. This indicator helps confirm whether the market's strength truly supports the pullback setups identified earlier, reducing the chance of false entries. Adding and configuring the MACD4C. Click on the Indicators tab at the top of your TradingView screen. In the search bar, type MACD4C and select it from the results list. Once it's added to your chart, open its Settings menu to optimize its parameters. Under the Inputs tab, change Fast Moving Average 12 to 100. Change Slow Moving Average 26 to 300. These wider periods transform the MACD4C into a higher time frame trend filter, meaning it focuses on the dominant long-term direction of the market instead of short-term fluctuations or pullbacks. This adjustment ensures that we only trade in the direction of sustained momentum, not temporary spikes or pullbacks that go against the broader trend. Optimizing the visuals. Next, move to the Style tab. Set the plot type to Area. This makes bullish and bearish zones visually clearer. Hide all extra elements, such as lines or labels, and keep only the MACD cloud area visible for a cleaner chart. Interpreting the MACD4C. Here's how to use the MACD4C in your analysis. When the MACD4C area turns green, it signals bullish market momentum, buyers are in control. When the MACD4C area turns red, it indicates bearish momentum. Sellers are dominating. Essentially, this indicator acts as your momentum confirmation layer. It confirms whether the pullback, identified by the EMA ribbon, is aligned with the actual strength of the trend.
Step 3. Combining both indicators, the core strategy. Now that both the EMA and Pullback indicator and MACD4C indicator are set up, it's time to bring them together into a single rule-based trading system. This combination gives you both structure from the EMA ribbon and momentum confirmation from the MACD4C, forming a disciplined, high-probability strategy that avoids chasing random moves. Buy setup conditions. For a valid buy setup, all of the following must align clearly before entering a trade. 1. EMA and Pullback indicator. Price breaks above the EMA ribbon, showing that bullish strength has overtaken short-term resistance. A bullish pullback signal appears as price briefly retraces into the ribbon before continuing upward. This indicates that buyers are re-entering after a short correction, which often leads to strong continuation moves. 2. MACD4C indicator. The MACD4C area turns green, confirming that momentum is bullish and in sync with the EMA structure. This ensures you're not buying into a weak or fading move. Instead, you're aligning with genuine upward pressure from the broader trend. 3. Price action confirmation. A bullish candle closes after the pullback signal, validating that buyers are stepping back in. This candle serves as your final trigger. Without it, the setup is considered incomplete. Entry rule. Once all 3 confirmations are in place, enter a buy trade immediately after the bullish confirmation candle closes. This approach keeps you patient and selective, waiting until both structure and momentum fully agree before committing to a position. Stop loss placement. Set your stop loss slightly below the recent swing low or just beneath the EMA ribbon. This gives your trade enough breathing room to handle minor volatility while still protecting capital if the setup fails. Take profit target. Aim for a 1-to-2 risk-to-reward ratio. In practical terms, if you're risking $10, your profit target should be $20. You can also trail your stop once price moves in your favor to lock in gains as the trade progresses.
Sell setup conditions. To identify a valid sell trade, apply the same logic in reverse. EMA and Pullback indicator. Price breaks below the EMA ribbon. A bearish pullback signal appears after price retests the ribbon. MACD4C indicator. The MACD area turns red, confirming bearish momentum. Price action confirmation. A bearish candle closes after the signal. Entry rule. Enter a sell trade at candle close. Stop loss, slightly above the recent swing high. Take profit. Maintain a 1-to-2 risk-to-reward ratio.
Final thoughts. Trading isn't about predicting. It's about aligning probabilities in your favor. The EMA Pullback and MACD4C strategy gives you a structured way to do that, combining price structure, pullback logic, and momentum confirmation into one clean setup. It's simple, visual, and works across markets and timeframes. Use it with patience, manage risk wisely, and over time, you'll notice the difference between chasing trades and catching the right ones. Remember, this tutorial is for educational purposes only and not financial advice. If you found this helpful, make sure to like, subscribe, and hit the bell icon so you never miss the next strategy breakdown. Until next time, stay disciplined, stay patient, and trade smart.